Hey everyone, welcome to my channel and welcome back to my subscribers. This is Bald Guy Money. I am Bald Guy, and today we are talking everything gold. Specifically, we are going to be taking a deep look into the numbers behind the price of gold and where gold can be going in 2022. So do not miss a second of this video. Watch to the very end, and before I start, take a moment right now. Give me a little feedback, please. Drop me a like, which is a message to me to keep making videos like this. And also everybody, for every like you drop down there, this gets the message out to more potential gold investors, which can of course help the price of gold go up. So help me out right now by dropping a like. Okay, so now that you've done that, gold is climbing upwards. Let's pull up the first chart. Here's what it's looked like so far in 2022. So congrats to all of my viewers who are gold hodlers, investors, savers, dollar cost averagers, whatever you call yourself, because even though none of this is financial advice, in my opinion, I think you've made a wise choice. But I mean, looking at these numbers, I understand 3% up year to date. It's not earth shattering. I mean, Bitcoin can do 3% in less than an hour, but it's moments like this when equities are coming down. So let's bring up actually the Dow Jones Industrial Average year to date. Here you go, down 5%. It's moments like this, you know, you're happy that you have hedged against other things like the US dollar or the stock market or even crypto, right? But don't get carried away with what I'm saying. I still believe in the stock market and a few very select cryptos, which I think are definitely worth investing in. But it's moments like this when I feel vindicated being a long-term holder of gold and silver. So I have been playing with some of the numbers, looking at potential scenarios and correlations to determine where we are possibly going to go with the price of gold. And here are a couple of my conclusions. The first conclusion is that the stock market still has some downward movements left to make, okay? And as a result of that, I've come to my second conclusion, which is gold, as always, will attract more what we call risk-off money as the market comes down. So what risk-off is basically less risky investments, and gold is traditionally a less risky investment, and it is traditionally seen as a fantastic hedge to a declining stock market. Now, just so you know that I'm not talking out of my butt, let's pull up the next chart. This is one that I showed in my October 5th video called Stock Market Crash Facts. And my assumption back then in that video was that the stock market was due for a correction of up to 25%. And taking a look at the Dow Jones Industrial Average, which I just showed a moment ago, it seems that we are down about 5% year to date, but 6% off of the end of 2021 highs, which means we still have potentially 19 to 20 percentage points still to come down. And if so far this year, for every 5 percentage points in downward movement, the price of gold has risen by 3 percentage points, as we've observed so far, we can make a primitive calculation to assume that we have about 12 percentage points still to come up from the year's starting price, bringing us up to a price per ounce around $2,071, which is a total increase of 15% since the beginning of the year's opening price, which was $1,801. Now, that's a very crude way of doing things, but it is an effective way of getting a ballpark idea of where we could be going during this downward market period. But there is a better way. Something I try to educate all my viewers on is calculating things in terms of market cap, or total valuation of a company, commodity, or crypto project. And the reason for that is because the value of something is very heavily dependent on how much of that something there actually is. For example, let's take this for example. You have two companies here, company X and company Y. You can see that company X has issued 1,000 shares in its company, and the value per share is $100. That means the total market cap, or the total value of company X, is $100,000. Looking at company Y, they've only issued 500 shares in their company, but the value per share is $200 per share, which means that even though the value per share of company Y is double what it is company X, the total value of the company is the same because they have less shares issued, and that's at $100,000. So now, what this has to do with the price of gold is simple. We know the total market cap or value of all the gold in the world is about $10 trillion. That's a very big number. So getting gold to make big price moves upwards is very difficult, and it requires a lot of money. Imagine, if all the gold, like I said, is valued at $10 trillion, for the price of an ounce to move from today's price of $1,853 per ounce up to $2,000, which is a price, by the way, I regularly hear people quoting nowadays on YouTube, that requires the valuation of all the gold in the world to go up by $800 billion. So how much money could potentially move into gold over the next few months as the market comes down? That's basically the question we have to answer to determine what the potential price of gold is going to be moving forward. Well, look at this. This chart shows the total valuation of the American equities market. Remember, equities are stocks at the end of 2021, which was basically the top. Now, we've already covered that this number is 5 to 6% lower today, which brings us to a value today, which is around a generous $51 trillion. It's a lot of money. It's really hard to wrap your head around that the equities market is worth around $51 trillion. Now, remember, there are markets also outside of the US and other parts of the world, and they are also in the same downward trend as the US market and will also likely seek gold. I'm saying investors in those markets will likely seek gold, in part as a risk-off investment to store money until things calm down. Now, let's bring up the next chart. So, we know that the US markets are about 56% of all the equity markets. So, knowing that, we can easily calculate the amount of money in the worldwide equity markets, which is not $51 trillion, but actually around $91 trillion. And if we assume that 20% of this money is still going to be looking for a home in the coming months, that means about $18 trillion is going to end up being split somehow between roughly these things. So here you see on this image, you see that it'll be split between people investing in gold, also Bitcoin, people who will be holding money in cash, people who will move their money into low-risk stocks or dividend stocks, and people who will be moving money into bonds as the bond yields increase, as the Federal Reserve tries to take money off of the market, or as they say, soak up some of the liquidity. Now that we know all of that, I have put together a model showing 3 scenarios, one conservative, one medium, and one aggressive, to determine what kind of gold price we could be seeing in 2022, and here it is. So you can see in the first scenario, if gold is able to capture about 5% of the $18 trillion that is going to be looking for a home soon, that will increase the market cap of gold, which is today $10 trillion, by about 9%. Meaning the new price of gold would be around $2,020 per ounce. Looking at the medium scenario, we see that it could capture about 10% of the $18 trillion, which means that gold would see a market cap growth of about 18%, bringing the price of gold up to $2,187 per ounce, and which is actually not that far off from the crude estimate that we did at the very beginning of the video. Now, in a very aggressive scenario, which I think it's possible, but I think it's less likely, gold could capture 15% of that $18 trillion, meaning that the market cap growth of gold would go up about 27% and the price of gold would reach $2,353 per ounce. And I hope that I've made it perfectly clear exactly how the price of something moves with the market cap. And I know, again, I've mentioned some of the other videos I've seen online, and I've seen people calling for $5,000, $6,000 gold. For me, I mean, I hope that you understand what I've shown you with the amount of money that's actually in the equities markets and what the market cap of gold is, that kind of price target, at least within 2022, is very, very unlikely. And with that, that is basically how I see the market right now, and potentially the price of gold developing within 2022. None of this is guaranteed, of course, and the markets can make quick reversals for no good reason at all. So be sure to be careful before making any financial decisions, and never invest money in anything that you can't afford to lose. As always, if you have any comments to add, please do so. I am active in the comments section. If you comment, I promise I will somehow reply to you. And with that, I wish you all a fantastic week ahead. Happy Valentine's Day. It's Valentine's Day today, isn't it? 14th? It is. Happy Valentine's Day, everybody. Take care of yourselves, take care of each other, and see you in the next one. Adios.